Sikasem ti do na panyin na waya akora say antutu sikasem ya baby e de ebefa no enye papa ene ye ba be hwe bi sonko your topic no how to accelerate your wealth using the stock market for beginners. One is going to be step by step and ye be hwe ne aka ho asem. How to accelerate your wealth using the stock market for beginners. And not even any come from seven. Said the American. You train what be you buy any the bad so. You know, on train labor. Your boy, Patrick Benfi, Our Life Radio, and LTA, Custom any other brown. How to accelerate your wealth using the stock market for beginners. How to accelerate your wealth using the stock market. Joe, Michelle, Joe. And then you can't your stock and you can't never be a fire stock. And you know, Kwasi went me and journey next time. And it is basically going to be on the stock, US stock market. You become once in the breed in there. Sending a feedback on yo. They can't your stocks mark some and that daily mainly no a baby soon US stocks and that you become once in the breed stock market and that you become once in the breed. In your feedback. Okay. Mo fan cheme kakra na late kakra bi. Yo, yes, start here hwɛ ade wɔ ha. Say we beginner na wo stock. Ope say who deal so timid stocks accelerate your and as a building water. You are the right place. You say the public you be hot man. They want to do it by stocks na se papa. Stocks as papa. And then you have a come asem. Until be why I say stock crana you be the build the world. If you find chemical crow hana. Okay. And see, why stocks? Why should we invest in stocks? Two reasons. One, time tested. And two, proven returns. You see, stock market, baby beer, atna watch ye. The stock market has been in existence since 1792. 1792 to which that time tested now. That's 1792 all the way up to this time now. just say stock market no a bibia I say juma because Kenya dia and Kenya juma kabana free ho and a prove say a man foot me the build the world. Yes, say juma ke man foot me the build the world. It said time in time out. Miracle everybody now no team say cost na eba form, you know, but in the long run a cost through. See since like I said, it has been in existence since 1792. 1792, so more than 200 years, right? But for the past 100 years, CSHA returns about 10.49%. For the past 100 years, about 10 almost 10.5. Almost 10.5. That means say the BC who as a form as a basro at the end no a cost at the end a cost at the end a cost me send me near feedback which me and then a cost and the kakra ham so share a free fancy be 90 years, be 100 years. Interesting years a perform me abesi. See 1935, your friends in 1930. Now the stock market was trading at 225 points. All the way to 1960. It was trading at 618 points. Until Hima say a triple, almost triple. Another all the way to be 1990, from 618 all the way to 2,679 points. That's how I was trading. He can say a quadruple now you share 2000 all the way another 30 years 2020 swap and also all the way from 2000 to 26,890 points na trade. We had that difference now. More, way more. We say about almost 10 times. As Yekasa CCA 5 years from 2020 all the way to 2025. And then say a trade at 42,762 points. And today when they say they be as a cost as a bafom, as a cost na bafom. And so, long term, we invested. It will not say we invested for the past, if I say past 30 years, and that's why for 30 years, 20 years. It doesn't matter the eba HM kuna a cost. The eba HM cost ekuna a cost. Before say be kokra, me DNT cry na stocks. It didn't now stock exchange and as a stock market no cry exist. You see, you're to say, your company, Bafus, your ton groceries, Caribbean and African groceries, mostly online. Now, person me ma company no kosura. Ebia na mako bank akoji loan that TV me ko bank cry ma loan bi ma pemo ho. And I say bia me person me loan bank bi. But at the same time, so person me timi e ma manfo timi metimi nyeska. It says I say dia metimi afa me company no na me divide the company no ma fa portion bi ana bisa na me divide no bebre sa division na me divide no and your friend shares it be am divide ma fa me company no portion bi na be am divide no by maybe 200 maybe am a ton 200 me ton ba ko bia no $20 it may ton ba ko bia $20 no That means me 200 shares na me turn $20. So we show that stock no na 4,000. That means the company no worth na 4,000. That is where say me may initiate IPO, which is initial public offering. Instead of saying me bank akwakoji loan, let me treat interest. Maybe I don't want to deal with the interest. Now, who as an investor, no but the top those shares nibia or risk it. It will turn me more interest. Name the man say what to share of it. Na me mama piece of the company. I am a company no. The stock market ni na no. Me mama the piece of the company na me if me create na yeah. It will risk it. As a company no start to say di kosro ni ade a na ye bibia na say ye nya more money na o company na your friends say amount profit. It's the amount of profit instead of say ubenya interest and abisa and no your profit. Na profit na unya no and the company no so I don't want to deal with it. It's a boame ma bia metimi expansion na say bia e bi kwa pese me yi sika kakra free company no metimi yi sika free company. It is the reason why stock exchange is some of it betimi de omo eniama ko public. On betimi de omo almost stock a catch amount for na amount for timi atobi. Hey, that's the reason why the whole thing no. It is the better timi to stock no be cry. The better timi to start. How do we make money? And I say how do we buy stocks? How to buy the stocks? You see, when it comes to air top stock star, the OCT to say they make no. So we initiate IPO now, which is initial public offering now. Untimi fa stock, untimi fa company name koto. Your companies be on ma, even though omo big, omo ni ho, e bi say Chick-fil-A, oni stock market. Inti anu untimi koto ho. The only place the only companies e betimi ato e wo stock market. Na your companies omo initiate IPO and not just omo be public, obi a betimi akọ so far as shares ni bi ho no ye tonko a betimi akọ makoto bi. It no any baby a you say a day betimi aye. Now so person auto stocks now we have to go through brokerage. Hey, now you brokerage bebre. In say gone on the days and chebia. Now it was very expensive to buy stocks and very time consuming. In says that time the papa be a washing it upon a tie be old man, white old man be a upon a tie be or baby, and also a phone calls or a deal or a friend or ye at to stocks in Biama. As I said, there was so many ways I bet me at so easy, bet me far from. There was so many platforms like Robinhood, the other Stash, so many things. And apart from that, the other big companies so how also bet me at to say you go cross open store to a fraction of a stock spread bet me at to be. All these companies are there. It's very simple these days. It needs hard times. I know still people don't realize say we are in a time bet me at to feel what facade. It's brokerage, so they make an it's then say best ye initiative brokerage. There are some few things, especially I was say a dream once. One, fees. Now say a bunny chess won't share fees. Which your fees will be a wutum. Also, you're very careful of fees because a bit near the diacum, you so. And our reputation. You know, some about platform and person me talk stocks and I say and our company can person me talk stocks no. Na me share na my fish you hold my men 20. Also we check those things in na. And then the other one your location. You know, to say they make us see with me at that bedroom what we can be in China now we talk US stock how with me or Ghana now we talk. Also who said stocks now person ton. It's me a multi years ad na. That the last one a type of account be na me here and person me talk. So these are the things that when it comes to brokerage, if see a stocks, I will see it in the year. And then no time so come. You see, we can only generally we can only trade and buy. You can only buy and sell stocks from 9:30 a.m. to 4 p.m. Eastern Standard Time, Monday through Friday, of course, excluding holidays. That is the time I bet me at stocks, but. Be more high change kakra. That is the time I say betting at stocks and kasa. I don't just say their platform be a betting at all. Maybe I'm initiating answer. That period maybe on be initiating. na to say the mechanic, you can only buy public only companies. That means somewhere in the public, they have their IPO, no, I'm gonna public. Those companies na ubitimi ato. Nti ehwe kwan ben so se etimi ayesa na etimi to kwan ben so ebitimi afa ebitimi enyeska when it comes to and as ebitimi amekiska. Ebitimi amekiska e was stocks two ways: appreciation and dividend. Ebeka kama sem kakra. Appreciation in a dividend. And the ways are ebitimi ayewe. Appreciation say mato stocks. Metal stocks na say mato stocks, be mato stocks na akosro. Simple. And no mato stocks na akosro. It I appreciate akosro. And a dividend more or less say what stocks no. The only thing is you owning the stock, you don't do anything. Now you just go bank account to mom. You don't have to do anything. All you're doing is just owning the stocks and you just make money. And no. To one appreciation, my two stocks na cost row. To remember example, Hanu, to say a share example for the purposes of this video, may you see McDonald's, maybe a Coca-Cola, and may you see more. If I say Mato 2024, McDonald's now Mickey D started the year trading at around $294 per share. At the end of 2024, now that shares was trading at $295 a share. That means when you're $5 up, it wasn't much do, but still any appreciation. And imagine say will be 100 shares. That means 100 times. That is how I appreciate it. And yeah, the amount is a good. Say companies like McDonald's say, apart from say be appreciating, which means any dividend because they are big companies and they make a lot of money. It's dividend na the to say they make an. But have the dividend is because you just own money keke. It's a company like McDonald's almost so much money in 2024 they made a lot of money. And companies like this, what do they do? There are three things that Munyeska will beat me. One, put more money in the company. Two, save some, and also the rest more share. And I say investors, which is who and now who our talk company what a piece of the company now you share amount. In 2024, it was reported say they gave $7 a share. Your friend saying $7. Oh, one share be $7. And you much more, but imagine so be 1,000 shares. That means we are saying 7,000. Oh, 100,000 shares. Example I'm making 2 or 10 shares. We are saying we are 70. See, so that is how a bit make stock marketing. Those are the only way. Appreciation and dividends. That is the way I bit make. And today in the stock market, it goes through now a buffer. How does the stock market, it moves, up and down. The money yes, see it doesn't matter saying CTBR price of anything, whether it's stocks, real estate, gold, you kind of say it depends on it need now come down to demand and supply. Demand and the supply, but when it comes to stocks, the supply any much because the supply is mostly the company need your one and then the supply period won't mean much. But sometimes there's a little bit to it because not long ago, I'm say just last month, what it is sometimes we need to take stocks maybe a one share. Coca-Cola it divided the one share be and divided by 10. The value didn't change. Value of the stock and say $100 of one stock is still the same. And I say $10. It's still the same, even though you're divided in 10. That means what? 10 stocks instead of 10 shares instead of one share. But still, 1 BI $1. It is still the same. The only thing that is changing is the number of shares and our cost. Sometimes some things because some floating more shares in change. They just put in more of share, friend of stock split, the same way. Demand, the when say when you can say demand goes up with inflation when it comes to stock. Inflation when it comes to just there's money in the system. Now, if money in the system, what happens? A lot of people take that money and buy stocks. The more amount for stocks, no, not the value of the stocks, no, a cost row. Then amount for try some more, try more. Now we say a cost row, cost row. You see, that's why inflation is always good for stocks. No, you see, anytime there's inflation, you know, so I'm out for stocks more, and as soon as stocks appreciate a cost row because of that. The second thing is growth. If company announces say, oh, you perceive grow a company, you know, you perceive more profit, more profit, a growth by innovation. Yeah, people can get excited and attract more people. The more people start buying it, and they start buying it. Those things no bit me to move stocks no back and forth. Now, obviously, no, say company doesn't look exciting, doesn't look say there's future. People start getting away from those stocks. These are some of the things size and in general, and also sometimes there's more economic issues, political stuff. It may change my stocks go up and down, but basically, these are the things that help, and I say my stocks go up and down. Now, you who say demand and supply, which when it comes to BIA and demand and supply. The next one, you share the next one, a strategy. Now, yes, I am a better yet to me. Up a BBA bit to me say you did building. What it is investing is risky. No two ways about that. Investing is risky. And investing, there's never guarantee to make money when it comes to investing. Investing is risky and there's never guarantee. But there are few things I'll be to me strategize it, I'll be to me about. You see, you can't just go in just like that, say, oh, Tobia. There should be a strategy. You see, sometimes the BB a bayama and maybe any amount. Don't say, oh, the ocean will be too much, but you see, you may classify two things here. Say, when it comes to investing, you're passive and your friend is saying active. You see, passive and active. I can say passive, no, just said it, and now as well, and I forget it, and active near more, so more involved. These are some of the things that the strategies are betting me use to betting me abuano. Until now, share dear wahano. Say a cobase ube use passive and also be use active. There are things that a bit me abua and what me I you see, set it and forget it, no. A way different from say getting more involved. And your stocks and your friend is saying your friend say your fund. So let's start with the passive. If you want to set it and forget that, which means you passive ones, no. Passive ones, no, to me, I think a lot of us, if you go in doing stocks, passive a bit more boy because we don't know a lot. If you're doing the active part now, you have to get involved, and it needs a lot. You have to be analyzing, doing so many things. So passive, to say, and then your friends say pay yourself first. No, we bit me set it every week be $200. This is me to, and mostly the boy bit and say there are so many funds out there. Fund a collection of your friends, a basket of stocks put together. And if you are doing that, that means you're not buying just one stock like Amazon or Walmart, Home Depot. No, you are buying a collection of stocks like the S&P 500 is the 500 largest publicly traded company. Your friends say United States. Beat me out to another fund. There are somewhere about 2,000 altogether. There are somewhere about 5,000. So many of them funds are beating me out. So you buy data. What it is they do everything for you. We have different kinds of these ones now. A bit me about those things. So passive is the active. More say you are getting more involved. So let's see the passive one. They are ones like index fund, mutual funds, and ETFs. These are the ones that ubetimi. So let's look into them. These are the funds I betimi etimi at all. One, the index fund. Let's go to index fund. Most of these it looks almost the same. There are just few caveats about these ones. No, so the fund is say index fund. Index one first. Index one, then it's a fund, but mostly you don't really do anything. It's done by computer. Amount. So you pay a fee for that. And since computer is doing it for you, the fee are usually less. Fee no less. These three things, the one thing is the fee. The second thing is the time I'll be to trading. Now the third thing, your fan say, whether say there's a minimum amount, I'll be to me a minimum amount how they start here, and I say there are no minimum. These are the things that here when it comes to these funds. So you're starting with the index fund. You say index fund, more of because computer or AI, whatever it is, they amount. Let me make an example to say if I say what to be to say S&P 500. To say they have a standard that will be also will be at Richie and Chebi and I read just ago say Bitcoin was saying a timia brick here room by a small share about say 0.01 or say 0.001 or say me share that my store that number by a very tiny share. What it is that you have to be some standard. It is a size standard name and you flow near the frabba. It's no, so what try no, and you also acquire some researching them say we want you see now see me way free. The computer is doing it for you, and the computer, it's a computer, so yeah, dear, I man the price no coffee. Into one, the fee no will low. Two, how many times now between a 3D index fund? Index fund between a trading one spec, and this is stocks are between a trading, unlimited no. And yes, there is a minimum between. To me, okay, example, say share VFIAX, S&P 500, Vanguard S&P 500. Share the spend ratio now. Usually the fee no for spend ratio. To share any stock BR shall be all these are public. But me on 0.4. Fee is 0.4%. That means every dollar BR now you be about 4 cents. That means any bad. Let me tell you trading one spec, and a minimum I'm meeting their starting 3,000. You share the next one, which is mutual fund. Mutual fund, then mutual fund, similar to index fund. The only difference is that there's a fund manager with the NIPA and the original one more share, and we'll make sure we know see all because see when it comes to stock exchange now, most companies try to make BT and that's almost make your friend is saying the S&P 500. Like I said, the past 100 years it has been averaging about 10.5. It will be our goal is at least a bit me meet that and that's will be beating that. Until you bring a fund manager no, maybe any so bit me maybe 10%. No. Until you share index your friends a mutual fund is since any pan the goal is to make more bit me beating no. Until obitina, that means say obey more. And then also no between trading once. And yes, and also no a war your friends say minimum. And example of mutual fund in fancy a T Rowe Price global value equity fund. And no your friends ticket symbol near TRGVX no. So the fee near 1.09%. If you fee when it comes to investing now you are paying fee, you have to be very careful. And we share no so and we mutual fund. Now we share mutual fund no so once between trading once in the whole day. And at the minimum I'll between they are starting at 2,500. You see 2,500. But the fee no no because grow because the more money you are making or the more can air cost room, the more I would share. It could be now 10,000 and a fund manager run amount 10,000 would to 1.08 1.09. Imagine say 100,000 send arbitria. Hey, it is very key. Say you make sure say you nimsani answer. This one there, since it's set up and go, no, which is the passive, no, all you got to do is make sure say you know the fees a TE amount. Then you can do that. And the next one, which is ETFs. The ETFs, your friends say they are estate traded funds. The other one, and also because what it is, ETFs they're in between. And when it comes to the fee, it can be high or low because your index fund ETFs and your index fund, your friend is saying a mutual fund. So depending on what kind of one, a bit the fee no, can be high or low. And ETFs is just like stocks. You betting trading unlimited anytime. Be betting trading during the day. No betting trading anytime. Be and there are no fees. Sorry, no minimum. You can start with zero, and that betting start with BBR. To remember, say platforms in BBR see anything. Betting start with $1. Cry now starting. Mostly what people do is if I want to do something like the friend saying Vanguard VFIAX now. Now me need 3,000 now. I can starting this trader. I can start with the ETF somewhere all the way till they do that 3,000. Now me a year from my best start away. You see, and no betting you don't have to. You can betting to share a portion of even a share. Yes, so that is the ETFs. So let's see the ETFs too. See here ETFs are fee, high or I said they can unlimited, high or low, unlimited, now investment minimum. And there's no investment minimum at all. It's an example, a SPA, which is S&P 500 ETF. And the fee is 0.9, 0.9. See, and unlimited, and a minimum. So there's no minimum. So these are the things a bit me a faswa, a bit me a bow, a more me I go through who say. Now, you can be about stocks. You see, stocks, you can be big a crime for stocks because when it comes to say stocks, that means we are buying a single stock, be a to be Amazon, to see a to be to say Home Depot, to be only a single one. Like I said, that becomes active, a money active, a hormone, a more involving. Like I said earlier on. Yes, it's good. Say ubit me auto stocks. It's good so ubit me invest. But when it comes to say auto stocks, you have to really know what you're doing. You move be on man. Here say we see a single stocks. Here say a to single stocks because single stocks a prime. You see, passive, set up and go. Less your friends a fee, and because you pay less fee, because we are not taking much risk, potentially, returns, awful, because we are not taking too much risk, because you put a collection of stocks together, a basket of stocks, you are putting it together, and you one ship. We don't do a lot. It's fees, potentially awful. When it comes to the active ones now, it involves a lot, and the people are risking. So it's more, they get more returns potentially. But like I said, the risk. So on the passive side, the active or passive side, potentially returns are down because you're not taking a lot of risk. Now, to say the kind for the purpose of this video, I'm just going to use Mickey D, McDonald's, and Coca-Cola, right? How do you analyze and value stocks to make smart investment decisions? Very complicated. If you stay with me, the whole video is about here. If you stay with me, I'll bet me at here. So, as Mickey D is trading 304 shares per share, and a Coca-Cola it traded $71 per share, right? Example. So say you be so because say company no the end we are right away no because yes because the share is 340 no yes that's the good one to do and that's the good one to buy. And when it comes to say be analyze stocks ni say who sani mana and yet the share no that share value because the share price is the value of the company and now the share divided by the number of shares. Say the American, if I have a company now the say called public, I take that share, me divide the company by so many way. Now one share of that company is $10. Now I divide it by 100. That means say the company no the word is what 1,000. You have to know all these and some episode yes single stocks. It's not all the time like I say single stock is risky because and now when one doesn't show say a good and I say you good. We were teaching and I say we were teaching way. You have to go further. That's when we come to market capitalization. You see, market capitalization, boom. Also, that answer. It's market capitalization of Mickey D. See, market capitalization, Mickey D, 200 and as of today, 220 billion, and Coca-Cola 9.8 billion. Of course. So Shima, yes, McDonald's is about almost 21 times capitalization than a friend saying Coca-Cola. But even that is still not enough to say, and also one, the stocks no was slow. Two, capitalization, market capitalization also still was slow channel. But still, that doesn't mean say, and the good stock also that is why we look at the P/E ratio. The P/E ratio, no, and a bit to me, the P/E ratio is more of like you can say same crime can bit more I say the value they use the metrics how many times are your friends say that and I say the measure of the company stocks price relative. Sunny money in them answer. So the P and your friend said P/E ratio. McDonald's 27.62 and Coca-Cola is 17.52. This two no bit by it's the P and your friend said ratio. It's just usually when the that ratio is down, it makes it that looks better. Obviously, that is what it is. Now can person make can commit to me an example Hanuma or say the P/E ratio price, that's the price to earning ratio. It's a valuation metric that measures a company's stock price relative to its earning per share. It's ways to gauge whether a stock is overvalued or undervalued. And then the metric say even though McDonald's so see who the P/E ratio now people say every crown at this company you overvalue na company be overvalue the stocks no while you say a bedu baby no say correcting itself it can drastically come down. It is the 27 times no if say and suggesting nature say with a low P/E ratio that means and no good because and no say because for 27 now for 17 that means say one would can say McDonald's the end was slow, but usually no can say you overvalue no. But if you compare the two now, technically the 17 is better than the 27. Even with that no crime, it still doesn't say a good but when I say good. So you see that's when the analysis comes in. If you are buying a single stock, there's a lot that you have to do. You have to know all these things, the P/E ratio. You have to know the market capitalization. You have to know the share values. All these, mostly the AI say share the share value now. Then we just start buying it. So these are the things you have to go through. And it's a lot. It's a lot. You cannot, if you knew Pia, what that field, and I say, what should I say, it entails a lot. You have to analyze all these things. That will start to say, and then also the company financial statement. Also, how the financial statement of that company it is. A BBO future, a BB from CCR. But you see, when you're buying a fan almost yes, I don't know. We don't have to worry about all those things. It's not because you be man. We don't need to be buying single stocks. At the same time, single stocks, I said them kind of because we take a risk, not because it costs through. The Nvidia by example, just last year it was 50 now for talk. It was very nice. But so they would just follow, the crowd also to be now need the eco at the end, they beat me. I never become just beginning of the year and said drop pay. Name chess a baby, because and a company BCD, CNC, Konya, dear, at the BMD CSE example. Nipa belong to CS and can excuse me, when you say CS. Now CS is CTA was one of the biggest retailers. So Amazon the intimate it's now where CS. It is single stocks ABB are very risky. And yet just the risky part you have to know. Now yes, I strongly believe say behavior counts when you're doing stuff because the more you do it, the more you will debt. Now I'll be behavior. And yes, I feel for now be jai. Won't say I'll be a part of you. It's not to mean jai. To all of a sudden, I start to say from crying. Yes, I feel emotions. You can't deal with stocks. Now, to me, stock market, so they try so to me, they build it wealth, not with the emotions, baby. You do emotion and our stocks may be at the end of it, and that's what the client not to know. When it comes to stock market, just make sure say you're dealing with the facts. We need facts now to whether open and I say one pay. And all these when you want to buy all these stuffs now, look around you. What are you buying? The things you need in your house, the things you need around. Are you buying Apple? That means Apple is good. Are you buying Google stuff? That means good. These are the things I would say I'm not for patronizing. Things are going on. I'm not for talk. It is person will be so simple. Look around you. Home Depot. You're talking about the time. Walmart. Yeah. So these are the single ones now making. Apart from that, it's really making because yes, single. Or more risky on life, or more risky on money, all for these things, potentially, a cost through. And me last year, for instance, Nvidia, it went up about more than 30%. But a set fund like S&P 500, we are reaching about 20 something, 25 or so, So it tells you. I think Nvidia it went up about 38 or so. If I'm not right, please move and check. But it was around that side, baby, sir. And S&P 500 was around 20 something percent, close to 30. So you cannot just look at just that and say, because the share price was running, but you need to analyze it. You need to know the P/E ratio. You need to know the market capitalization. And also you have to be able to read the financial statement, their balance sheet. You have to know all these things before. And like I said, most of us know any BBA a bit near a do a bit nearby in field the boy near because it takes a lot of time. You see, when I'm talking about this, I'm not talking about trading. I'm talking about BBA investing a friends near trading. To say the amount for trading stocks or not. I'm talking and say we'll build what using the stock market. It is a share, say earlier on near Kana for a long period of time. Would you be crying now when you're much involved, see crowd statistics where you're much involved. How many times was the stock in a cost room now before? You see, but at the long range, I appreciate your cost room. You see, these are the things that I will say it me fair. It stocks. The next one, a bad bit to me at time say any mistakes. Your friend is saying it was stocks. You see, mistakes a bit me avoid it. You bit me avoid it if you try say if you try say we are doing it with facts. You see, in times when it comes to stock market, facts are your friends. Make sure that facts are your friend. You can't go away from that, and you can't be emotional. You see, stock goes up and down. For the past 100 years, See, I'm quite true. Like I said, the stock exchange has been in existence since 1792. But me and quite true be for the past 100 years, right? We have had so many things going on. Every situation be a this stocks in eco form. I'm for back out. This time is different. Oh, the other time it was COVID. This time there are tariffs. And yet they say tariffs the other bar. Hey, the stock market is down. Oh, COVID didn't say COVID quiet the cyber back. They will say different things. The past 100 years, we have had 16 recessions. 16 recessions. 25 stock market crash. We have had 25 stock market crash. But let's go back and see let's go back all the way and Shadi from almost 100 years back. 1930. Now the stock market was trading at 225 points. All the way 30 years time, which is 1960, it was trading at 618 points. Almost triple. Right? And so within this, even the 1930s, it was one of the worst time in stock exchange. By back about 1970, triple. Then all the way after that, 30 years, 1990, from 618 all the way to 2,679 points. Look at the difference. And all this time, there was stuff also going on. A lot of stuff happened. Recessions. Your friends say bear market. Bear market means the stock market going down more than 20 or more percent down. Bear market, right? It was in there. But even with that, it still went up. From 618 to all the way to 2,679. I don't know what we say about this, a quadruple, right? So we had the 1930s now to say a triple, this a quadruple. From that time all the way to 2020, you know, beyond my near that time to really 2007, even 2000. You 2000, that crash about the friend said .com crash. Maybe I know you can say, 2008, 2009, and then they need to say, each time they say different thing. Oh, this is different. This is housing. With the MLB, the stock market is gone. Right? But when in this year, from that time to another 30 years, from that time, and the from 2000 all the way to 2020. From 2020, 2,679 points all the way to 26,890 points. I don't know, 10 times? Yes, 10 times. It went 10 times. But they said the same thing that they are saying today. And Shadi, from that time, just 5 years, from 2020, in this year, from 2020, COVID, in the shut it down. The economy was shut down. Everything was not going on. What credit is for that just 5 years, almost double, from 26,000, 80%, from 26,890 points to 42,762 as I'm talking today. My friends say June 9th, 2025. Yes. So if you avoiding mistakes in the stock market, you cannot listen to this noise. Recessions happens, downturns happens, crash happens, but in a period of a long while, the stock market appreciates. Don't take my word for it. Do your own research. It's there. So memo be me can send be who are soon. So we did it became a whole lot of different stories. Stories be blown back. We did different. And I won't talk about we did this time there. Yeah, it just we did different crowd. Just look, for the past 100 years, we've gone through all this. But still, from 225 points all the way to 42,000 points. And let me tell you something. Recessions aren't going anywhere. Crashes aren't going anywhere. In fact, more are going to happen. But still, it's going to appreciate. Still, it's going to go up. Depending on the things you're buying. Two, if you put yourself in a fund that you're free, basket of companies, a lot of them, 2001s, your friends say VI, VO, that's the total market. VI, VTI or so, the total. You have so many of them. We'll be to the whole economy, the whole market. But most people, most your friends saying, fan or anything trying to mimic the S&P 500. It's very easy so bet me at us. You see, some people think that there are some different things. BS 4 to the same. The difference is the S&P 500. Imagine say has been averaging about 10% for the past 30 years. And now for the last year, right? We need a calculator for this. For the last year, from last 5 years, in 2020, so 2020 now 2020, and now if I say 50,000 a woman, right? 50,000. A friend is saying almost 80%. 50,000 more, almost 80%. And almost 80%. Now 40,000. When you're 90,000, when you're almost there 40,000, I count 90,000. And imagine so we will come over 5,000, 5 million a woman. No, from 2020, no, about 5 million a woman, right? 5 million woman. When you saying 4 million, so also the idea 5 and 9 million. There's no secret anything anywhere. It's the same thing depending on amount. So we kakra na a bit in your point be able to be more. So men train said there's something different be baby. And moving can be so win away in a way. Signing one on Kenya. The amount for Kasanko phone come on phone here. But I'll show more make his car. Aha, the bree had no doom because so now 20 years you're not lifting a finger, but it's making money for you. And we all know this economy. If you're in a capitalist society, you are not investing your tax chain. So you have to find a way to invest to reduce your taxes. It is one of the mistakes that you better avoid and say we should try say as much as say you better try say you better jai noise nechidi. I'm a for kasa brain that they talk a lot. With this time is different. You better try see change the next shiny thing, the next Amazon, the next Nvidia, the next way. Nemu ya you focus. And a bit me boy. That's one of the big mistakes I was see it me try say be year free, a year free life. The next thing they say, you better try say, you don't lose money unless your friend is saying, unless you sell it. See, I quite remember say, I think it was 2008-9, those times Nana Name cost will be someone Buffett. Buffett lost a lot of money because it was, I think the Jones was about 9,000 something. It went all the way to bear 4,000 or so, to about 50% gone. Lisa said, yeah, if you lost about, I said, I haven't lost anything. I said, why? I said, it's just on paper. Remember, you don't lose money until you sell it. It is own to your own see. But I see when things like this happen, people panic because they don't have the information. They don't know the history. They don't know so many things. So they panic. Then they start selling. The be American on Buffett, me paraphrase, me need quote, like I will say the stock exchange, the stock market, baby, the patient take money away from the impatient. Into what point na omo tiasie no omo akoto. Into e 9,000 about 4,000. Otwa when you because 9,000 be saba. Day be saba and some more. Ampa from that time all the way as he kasa right now, omo di 4,000, they say 42,000. Into at a long time, a be cost from I appreciate it. It a money and you know a money dear trick did say as a head there be from. You don't lose money until you lose it. So do not time the market. The next mistake, make sure say you don't time the market. You see, throughout our lifespan now, only 9 days. 9 days, and I'll prove this to you. I'll come here and do this show. Another show, I'll make sure say 9 days per 9 days. Okay, yes, I'll be investing in stock market in 30 years. Only 9 days per and a bit more. I make it the money I'll be 9 days per. Because we've seen the trends sometimes, no stock neko from and bouncing back. I'm making a lot of money in that session. 1 day per. It's throughout a span where in 9 days per. And it makes so much money. And if you don't let the money sit, now what time market, you know, you will lose that 9 days. Even if you lose 2 days, a better perform be brave. A better perform be brave. So do not time the market. Set it and forget it. Let's say, you should baby. It will make anything that you are putting in there as part of your expenses. That means where you should call expenses. For can expenses on where you should call. The next thing we see here, big time, fees. We shouldn't ignore the fees. Even the mutual fund here. That the funny thing is, even mutual fund, because they said make and try say tracking on the S&P 500 10% and up a little bit, about 10.5% and almost 10.5% for the past 100 years now. And it's you more money. The friend said fund manager say be 14% am I. Steady say the more researchers say they don't sometimes the more uses and they don't even meet even S&P 500. So you have to wise up. You have to make sure say that fund manager and what a particular thing about this fund manager send more easy because one fee no to say me kind say 100,000 na utia 1% I call 1 million say na utia. Steady say 1% fee can cost you over 25% of the total investment, your total investment portfolio. Just 1%. Because remember, the more money they cost you, the more you are paying. So don't ignore that. So that's another mistake. So what's it? One, don't time the market. Two, what you have to remember, and I say, recession comes and go, downturns come, crashes come. And make sure say you don't turn bad no kwaku usika. What time market no that I cost na dia kugum welusu. You see, the only place I still don't understand it. It was still at ni dwane stock market. Ihu yen kamasis yes ani na ekwakoto. In a restaurant. The only store yes says yankum the stock market. A cough my son still buy more. And don't put another mistake, don't put all your money in one basket. You see, to say the kind, yes, some of the stocks, single stocks, amount more. We share the rates, the returns, ooh, nice. But don't do that. Diversify. Make sure, say, especially if you cannot analyze all these things that I hear about, but analyze the capital, market capital, the P&E, but read the difference financial statement and who the future of the year. Don't follow the crowd on those particular ones now, and I don't chase the next shining company, Amazon. Don't chase that. I mean, it's good. So maybe a portion of it, a little bit of it, a bit but putting all your money, TBI bread. There's one company in Iran. That company, I'm for that's right now, wiped out. One day, it can happen. Don't come to him say, well, Amazon, you shift the way almost see it. No, CS. One day, pay amount for sorry, it was saying, it's gone. So, but if we talk basket of companies, 500 companies, need 90 go from one day that unless in general the total stock market in general, total economy in our air for and no crying be jabby. Intimate co zero that intimate yes a crypto, between your call 100,000 the next day now about $1. No, yes, sir. So diversify. Don't put all your money in one basket. The next thing is invest more money than you are willing to lose. Don't use your investment brokerage account like checking account. See, if you are using your investment account to pay for your rent, to pay for your mortgage, to feed yourself, you are doing it all wrong. You are doing it all wrong. You see, if you don't, see the 10% now you can say, wow, Mexican somehow near Juana. You'll be near the 10%, but that money will be less. It's 900,000 or 50,000 free money. 10% of 100,000, you're saying 10,000. 10% of 50,000, you're saying 5,000. Until you won't be able to make the money never so to making. And remember, the BIC is this system 25, 10, 15. Make sure say you are investing 15% of everything. You are saving 10% of everything, 75% using. Now, savings, if you are saving money and you don't know why you're saving the money, you shouldn't be saving that money. You are doing it wrong. It has to be invested. It has to be invested. Apart from Bibiano, wow, we Juma and income, dear, also maybe to actually. Yes, can they because you were to see a DNA and I went to me and Juma cry, and you were not BBS na DNA. So you need emergency fund, which and really different from business for now every day you scam. But say no crime, yeah, sometimes we here depend on the type of business. But we earn income quite here scada which you hear scada which. If anything happen, you use that money. But if you have to go back to that investment account to sell that stocks, to sell that fund, baby car, you are doing it all wrong. Make sure it can be out there too. It's like it's gone. You're not having it anymore. Right? Especially a community in wrong. You see, amount for investing, you're investing in a 401k, you're investing in Rota. You invest here, do baby, and you're going in yourself. You see, that money is to feed you when you're not working anymore, when you are retired. And you need to see a deal. In this case, what's your Nemo, while retiring, no more bear 500,000. That's 10%. Once a year came out 10%. That means we'll be near 50,000 every year. So you let that money sit, not that 50,000 if you do every year. That's it. Sometimes it's just key to her. Kakra also be near the account. Until you says it can indeed. It is a we invested. That's also to investment and not to a channel to be able to not. No, you are doing it wrong. Sekebia we invest beyond. Make sure that money is gone like it's gone. Refi and co invest. Let Nemu chat said they can long last bring that money now. And a bit more build the world. This is step by step for beginners. How I will be to me and build the world using the stock market. The next one, mistake a bit me avoid being inconsistent. Being inconsistent. Maybe two or two. Maybe 500 every month. 6 months more jai. Not if it has a stock like cost through was I started. Like I said, only 9 days. throughout your life, you be invested for 30 years, 9 days pay, and they make a difference in all those years. And if you miss those days, I may say a big time. Being inconsistent, and to me, my own build the work when you sue stock market. You see, I wish I could meet me. If we are consistent, it's different. It makes you more money. It makes you more money when you are consistent. Yes, it me we have my calculation be it makes you more money. So being inconsistent there and your idea or see the actually cry. See, yes, because sometimes when you talk about being inconsistent, I am a for so we are consistent when it comes to the stock market. It changes everything, right? Sometimes can I hear crying? Am I yet too a okay? Oh, sure. So you're making sure say we are being very consistent, very, very, very consistent, very consistent. What is this? Say consistent. Send it between your boy. I found. All right. If I see started from bed 25. Yeah, we are 1960 up now. We are your friend is saying. Your retirement is 1967. Into you started for 25. And you did $100 credit to home. Every your friend saying every month. Right? Now the money is at 10.5% now you can watch it now. By the time I retire, me and 100,000, 900,000. That's the time I retire. You see, yes, we are inconsistent. Won't mean yes 900. But look at here. I want you to look at something. Okay, with your contribution, the 82 me 50,400, 860. You did not put in. You did not put in. You had two more compounding growth. I bound the growth about we are the percent in 94%. We are inconsistent. Won't me yes can so the $100 up to my do baby no jai yes can. Upa bit me a bit say be about to 25 and me do 30 me jai and my train 14 was that you won't get this money. At the same time, so this person so starting at 35 Chris will be just 10 years old. Look at the difference. So started 10 years or 100, 112. Look at the difference. Vast difference. Into one is good say best at yearly and be consistent. Into the end I say what network me can. That's it ultimate and you sue and build the BBC. The best time to invest was yesterday. The second best time is now. That means what me can net now in your investment. Try so we be starting now. There are so many platforms these days. No, but you start even $5. So per fan, minimum near 3,000 now. Start with fun. Your friend saying, Robin will start with now 3,000 and walk out to fun now. That's a one tier CSW. We get in touch with us. You bet me a bow. I'm what I say. These are the contacts that will with me. I get in touch with me. And you apart from your boama for mom, a stocks, your boama for mom financial issues, more, especially, a dick be brilliant in here. it specializes here in free debt. Yeah, plan man crofo, you be on man. Yeah, financial plan among you be on my episode cotton fee, you be so episode now you need the yeah. Getting tidy bit me plan amount nice. I bit me more tenefi, go crana sini city, a bit me more quaba 6 months, you're planning in amount. I am found what chamber. Get in touch, a bit me a boy, and why sign him. So you can use you know you be on man. Yaman phobia dada and said, you be free quite a bit. You see, you can use the stock market to build wealth, but you have to have a strategy. And these are the things, these are the strategies a bit me use, a bit me apply. I mean, it's me a move gradual. Near stop see chase the next shiny things now. The Bitcoins and all that. Yeah, those things are good, but you cha too much. But bit me I built this. I built in a year gradual. The track record is there. Track record never. At the same time, Mr. Aka, and ye baby na it be at the stock market in bit me a year drama. Ye baby, but US war UK. When you said Germany for Holland for the young time getting to this, but now you good. You face any money now you good. Very soon we start talking more about the UK ones too. Investment will be what's amount for your money, secure also money free. Those so many things are you get a bit me poor. To say they can, but baby, you take advantage of those now. You take advantage of them. Look at your environment. That's how finance is. Show environment, what capitalist society, also environment, also making sure say taxes, I will take care of it. We'll take care of it because Sani money is free, who be brave. Silent, a friend is saying, silent idea is free, who be brave. One of them is taxes. You have to look at your environment. Also, see your environment, no, they say we need excuse. There are so many people doing videos. See, Kumka say, we'll go online, we'll join a YouTube channel, Patrick Beff YouTube channel. Every Wednesday, you cry a program, paradigm shift. Those things in a bit me about what till finance. I say, we'll join the paradigm shift. We'll subscribe to it, Patrick Beff YouTube channel. We'll those things in a bit me about. A bit me about. I'm what finance, what we name as personal finance. See, personal finance is just personal. A personal to extent say, won't mean for you be here any way. I mean, there are basic stuff also here. But we'll be in a situation. Because we'll be in status or talk or investing in stock right now. We'll be in me. And so we'll be so every position be a yes, a good. I think that makes us will be in me. And make it sense. So they can be free. Credit cards can be free. Now we invest it. It doesn't because you say on average you make it 10%. Credit card saying that you should have about 10% interest. On average, credit card is about 22%. Until the train what 22% interest amobi. Near amount 10%. It doesn't make sense. By I see a near in this situation, personal finance won't do that stage, I will say, we'll start this over yes, you take it, bringing it down out to a point. Maybe a walk around a canoe, maybe and didn't cool, and never be more. Then you start doing that. It means you'll be here. But what I want to understand is, yes, but me use stock market. It means they build the world, and it has been done, and it's still be a cost amount for you to be now the part I am for crowd making more money the time I echo for. Because the time I echo for, they buy more. Let me repeat again, may paraphrase what Warren Buffett, one of the greatest investors of our time, period. One of the greatest. The do is about 90 something. I think now I'm so retired. Over 100 and something billion. Or say the stock market is where the impatience and not the patients take money from the impatience. They say they kind free. no more patience, no matter them, no matter. It is any 9,000, about 4,005. I won't told him. As see a number 42,000. Look at the difference when you Satan look at 1 million, no toss. Look at the difference. It's a man for you did, a man for you did. Hey, we different. No, this time the be 2028, 29, housing market. Hey, with the Trump tariffs, no, stay in there. Rather buy more. My advice to more say a for more crack to and cry. And that's when you have cry. Passive one, set it and forget it. Every month, be every week, every 2 weeks, piano, or the old Diana say, it's a 280 from 84 comes near the quack to you any free so. Maybe 30 years now be 1.2, 1.3, 40 years now be 2 million. Because I'm not all the old gums are now the auto. Because a yet they are a besabasu. Over and over and over again. Iti so issue bia fasa ne man ho a get in touch betimi abo mo start wa so betimi aye enye den sesei betimi get into any but you be bro mat say dem kan yentimi ni say because e can doso all the money comes in, all the money goes out. All the money comes in, all the money goes out. You will debt be who we are be. Hey, in Konya debt, you will be TV debt, sound system debt, BBR, $20 from here. See, pizza, cranny, better near the top. That's so. Did the BNN see your interest, if for that situation now? Near more. Near more, the free situation. Because I won't get here ahead that. The BR now. These are the emails, numbers. Office number 202-592-1404, phone number 703-981-1910. And once I was up between artists between a more free situation. That's why you should stock markets not so to be a build the wealth and see be at me they build the wealth and be. Yes. Be consistent, many inconsistent. But see them can when you know say when to me I'm bringing so many things down and be things so bit me. And because of a cabby brainy I didn't know even in crying for 1K crying a match. Free money you see and pay because of your situation, because of your lifestyle. And you see you make it go, you make it sick up by lifestyle inflation equity. You increase your income. Your lifestyle also cost through. And the income no cost through be bree. It's baby it money to even crying your coffin. How do you pay once a worker say I make it 200,000 so you are broke? Hey, that's a matter. But the BID mechanic say, show me the money. Say if you make it 200 now so you are not broke, show me the money. You don't have anything because all the money is gone. When you say, oh, what's that situation? I sometimes say, they say, well, I'll bet me. I'm with free situation, also with me invest. Because she munipa be making 6 figures, about 33 or so percent. I said 23%. They make it 6 figures. They live on paycheck to paycheck. Among live on paycheck to paycheck in browser, they don't have a lot. They have nothing to show for. Say, even they make those 6 figures. All because of lack of financial education. Get in touch, near more. And yan so. Mammy entry, call you trying to be bread chain. The movie so I didn't hear what's our can we. Oh, yeah, building a credit. Yeah, building a credit. Credit, no. Hey, near Jika, near the build the credit in your sanity. And yan no credit is a chinchina disorder. You will waste a bit and build a creditor. You don't have to go through that process. And you see between one way, so those things in there. So get in touch. And Besiano, Sikasem, Patrick Fee, how life we do now, every Monday be a ha. Yeah, I mean, I can come a boy and then home fan crack. Next week, over, yeah, twice. But you make sure that we are spending wisely, saving intentionally, and be generous. It won't be Monday. That's a Wednesday, said the if you want to be part of the paradigm shift program, so waiting in a live show, so subscribe to my YouTube channel, Patrick Befi, and I say Facebook, Patrick Befi. We'll get to those two now in your life. All right, see you. Bye-bye.